Okay. So if you can see me clearly and you can hear my voice clearly, can you just drop a comment for me before I proceed? You can see me and you can hear my voice. Can you drop a comment for me quickly? Quickly. Starting from next month, which is May 11th, we're going to be having something exciting. I'm very sure some of us would have already been seeing it. Some of us would have already been hearing about it online or from your account manager. So let me just quickly share it here once more. We're going to be having what is called the EBC Elite Demo Trading competition, and it's going to be amazing. All right, it's going to be an amazing period. It's going to be an amazing experience. It's really, really going to be top notch. You don't want to miss out on this. You don't want to miss out on this. All right. So it's the EBC Elite Demo Trading, which means you're not trading with your real account. All you just need to do is to have a demo account, and then you going to be competing for the top number one. So the prize pool is $1,000, and we are going to majorly the price pool is $1,000, and we are going to be majorly, there's going to be a sharing formula between the first person and the fifth person. Now, please take note, while it is demo trading or demo competition, let me put it that way, which means you are using your demo account, right? Yeah, that doesn't mean that there are rules and there are regulations for you to participate. So take note of that. All right, there are rules and regulations for you to participate in this competition. And the first and number one rule is that you have to be a valid client. You have to be a valid client. What does a valid client mean? A valid client is somebody who have registered on the EBC platform, who have verified his or her page or his or her trading account, and you have some funds in your account, right? In your life account. Okay, so make sure that you understand that that's very, very well. So it's not you're not doing it on live account. Of course, it's a demo trading competition, but there are rules and there are terms and conditions attached for you to participate. All right, so it is only for eligible clients who okay, it is only for eligible clients, and the eligibility of you being an eligible client is what I've just told you. You have to register an account, you have to make sure you verify the account, and you have to have at least the minimum fund in your account. The minimum fund in your account. So if you want to know what the minimum fund is, please speak to your account manager for you to get more information on how to participate on this. And they're going to give you more, they're going to shed more light on how to participate. But it's very easy, it's very simple. Like I said, you just have to be a client. And to be a client with any broker, I don't need to tell you that you need to have a verified account and you need to be trading with that broker. It's obvious. All right, it's very obvious. It's something very straightforward. So let me just quickly take you around the price pool and some of the things that you need to know. Number one is it's going to be starting from on the 11th of May down to the 22nd of May 2026. I think that's about 11 days if I'm not mistaken. 11th of May to 22nd of May 2026. And there's going to be a ladder board, which means there's going to be a leaderboard rather, which means that as you're trading, as you're making money, as you are going ahead of everybody, you're going to be seeing your name, just like the normal competition and the way it normally looks like. So we'll be updating it on our website every now and then. Right, so you'll be seeing it, and also I think we're also going to be launching our app pretty soon. So hopefully, maybe before this time, we might launch the app. If that happens, you're also going to be seeing it on the app, right? You're going to be seeing your name. So I'm sure that Nigerians don't carry last, because this particular region, this particular one you're looking at right now, covers India, Vietnam, South Africa, Kenya, Ghana, Nigeria, right? So we have a lot of more of African traders anyway for this particular one. I just few Asian guys. So make sure that you actually participate and make sure you make Nigeria proud. All right. Okay, so what's are the price pool? These are the price pools. First price is $300. And EBC, we don't play, guys. We don't play. We don't play. When I mean we don't play, we don't do all those nonsense of after you have won the prize, we now start telling you, giving you terms and conditions. You have to do this one, you have to do that one. No, guys, we don't do that nonsense here. If you win it, you have it. It's your money. Last year, we gave out $200,000 cash because the condition last year was $1 million in trading funds or $200,000 cash. If you don't want to, you don't want to trade, you don't just want to withdraw money. We'll give you $200,000 cash or $1 million in trading funds, anyone you want. And last year we now walked away with $200,000 in trading. So we don't play, no conditions, no nothing. So make sure that you take part of this or you're a part of this. Second prize is $200. Third prize is $100, and then we have fourth to fifth, $50. All right. So guys, like I said, don't sleep on this. How do you participate? How should you participate? Simple, 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 simple. All you have to do, be an eligible client with EBC. What does it mean? You have to be a client that has done his or her KYC. Your KYC must be approved. You must have at least some minimum funds in your account, whether you're trading it or not, doesn't matter. And of course, you have to also have a demo account that you want to use to participate in the event. And then for more information, like I said, you can reach out to your account manager to participate in this. They will give you the step-by-step process on how to get this activated, and then you can start trading. Anyway, that's one of the exciting news I wanted to share with us. Let's quickly go to the next one. Like I said, today is going to be a masterclass. We are going to be sharing how you can use stochastics. Stochastic is it's an indicator that it's majorly an indicator that tells you the overbought and oversold regions within the market or within market price, and how you can combine it with moving average to be able to properly understand how to, take advantage of markets. All right. Now, let me quickly say this. A lot of times people say a lot of things about indicators. So indicators are lagging, indicators are this, indicators are that. Let me quickly tell you this. If you are treating an indicator like the alpha and omega of any of price, if you believe that, okay, when stochastic is telling you is this, or when when the indicator is indicating sell, you just go and sell without anything because you believe it is the alpha and omega of price. Of course, you're going to have some bad experience, and then you're going to be part of people that are going to be online saying indicators are bad. I only trade with price action. Okay, whether it is price action, whether it is indicator, whether it is anything you are using, as long as you treat that thing as the alpha and omega of price, you will continue to fail. Market trading is all about understanding how price moves and then using all these things, whether it's price action indicator, whatever you want to use, to as a tool to make your work easier. You are the trader, not the indicator. So if you are using an indicator, the indicator, just like the word indicator, it indicates to you the levels that you should pay attention to, in quotes, which means when I pay attention to those levels, I check it, and then I'm able to determine if those levels are worth paying attention to because I am the trader. It's just like you getting a vehicle, right? There are some vehicles, Tokumbo vehicles, that comes with check engine lights, which don't really mean anything. Some of them are coming with check engine light because some things have been removed from the vehicle, right? While some of them comes with check engine light that you need to check. It now depends on the type of vehicle and your experience as somebody who has, had experience in that line. It's not every check engine light that you go and you begin to panic and you feel that your engine is bad. Some just indicate the fact that some components has been removed, which doesn't actually affect the performance of the vehicle. So indications or indicators are not to be treated as the holy grail of trading. Right. So what we're about to talk about right now is to give you a tool. What I want to give you this morning is a tool that you can use in combination of your own knowledge of how price works. You can use them as a tool to be able to understand better, to be able to pinpoint better where you should take your trades or where you should enter the market. They are not to be treated as the holy grail or the alpha and omega of price. So please take note of that. Let's really go to our charts and let's look at it very quickly. Because I just wanted to put that out because I see a lot of people saying a lot of things without knowledge, nowadays online. And okay, so I'm on my chart. I'm on Euro USD. I hope we can all see my chart. It's very important you can see my chart. I'm going to be going to the 1 hour time frame, and I'm going to be using this. Majorly, this indicator works on 15-minute time frame or 1 hour time frame. So I'm going to give an example of Euro USD, and I'm also going to give an example of what's it called? Of gold, right? And we're going to do it together. All right. Um, Okay, if you're a beginner, please listen up. If you're a beginner in this section, please listen up. I'm going to be breaking it down. I'm going to be assuming everybody is a beginner. All right, so I'm going to be breaking it down to the beginner level. So even if you're just starting trading today, as long as you know how to buy and sell, you understand basic things about trading. When I mean basic things, buy, sell, green candle, red candle, I'm going to break it down to that level. All right, so just pay attention. It's going to be easy. Trust me. All I just need you to do is to pay some attention to what we are doing. All right. So the first thing you need to understand is that the I'm going to be using. Let me see. Can I use my phone? Since majority of us are using the phone, let me see if I can just log in with my phone. I don't think, I hope that will not take our time. Or let me use the laptop first, then I will switch to the phone and then do the same thing on the phone so that you can understand. But it's pretty the same things. And I'm going to be explaining it how you're going to get it on your own phone as I'm doing it on my laptop, all right? So the first thing I want to do, I'm already on the chart of Euro USD. And the first thing I want to do is to put up my moving average, right? So if you're on your phone, all you just need to do, if you're on MT5, if you click on your screen, you should see something like N with like Naira, right? Like the N symbol for Naira, you should see it on your screen. If you're on MT4, you will see it as F. You will see it as F, right? Once you click on that, you're going to see trend. You're going to see oscillator. Oh, sorry, on the phone, when you click on that, you're going to see indicator window on your phone. So when you click on indicator window, you're going to see a plus sign on that indicator window. You're going to see a plus sign. When you click on that plus sign, it will take you to all this trend, oscillator, volume, Bill Williams. You will not see custom. These are the four things you're going to see: trend, oscillator, volumes, and Bill Williams, right? So you go to trend. For the moving average, we're going to go to trend because the moving average is a trend indicator. And we're going to put in the moving average. Now, for this moving average, we are looking at the 21 period exponential moving average. So take note, you're looking at the 21 period exponential moving average. What it means is that your period is going to be 21, your method is going to be exponential, you're going to apply to close. The color you can put your style, you can make it your favorite color. I like blue because my background is white. And then the line, make it very thick or the thickest of them all. And then you have this on your charts. All right. So you have this line on your charts. Okay. Now, let me quickly explain what this line indicates for you. Now, this line is majorly a dynamic level of support and resistance. Let me quickly explain this in case you don't understand what support and resistance are. Now, in trading, candlesticks moves based on zones, right? And anytime a price is moving, it moves from a zone of support to a zone of resistance. In other words, it moves from a zone of demand to a zone of supply, from a zone of demand to a zone of supply. What it means is that price is being influenced by two major factors in the market. We have the demand factor and we have the supply factor. The demand factor is what makes the price to move up. So this market going up this morning now for Euro USD, price has been moving up this morning. This movement to the upside is being influenced by demand. And another word for demand is support. So anytime you hear me say the word support, what I'm talking about is demand. It's the same thing, right? And anytime you see price moving down, like in this case here, we say the price is being influenced by the power of supply. Because anytime supply is above demand, price will go down. If the number of petrol stations that wants to sell petrol in Nigeria are more than the people that need petrol, the price of petrol will go down. Why? Because, of course, there's nobody to buy it. But when the people that wants to buy petrol are more, than the petrol station, or more than the quantity of petrol that we even have, as a country, then of course the price will go up. So it's just, so the reason why, or the reason in quotes why the price of Nigeria fuel is up right now is because of what is happening between Israel and Iran, whereby blocking the Strait of Hormuz, not allowing passage of crude oil to pass, and that's the reason they are giving us anyway. But if you look at it logically, it should make sense. But for a country that produces oil, it doesn't make sense anyway. But that is the reason they are giving us, which logically looks legit, because when there is no crude oil, price becomes expensive, right? Scarcity and then demand. So why am I bringing this up? I'm bringing this up because you see this indicator here, this moving average indicator here indicates to you, is a dynamic indicator that helps you in case you don't know how to really pick out the demand zone and the supply zone on your own by just looking at the charts. As a beginner, you don't know how. So this moving average is a dynamic support and resistance indicator that tells you when the price is having oversupply and price is going down, and when the price demand is high and then the price is going up. How? It is being known, or it is you can get this information by understanding the position of the moving average to price. Let me repeat that. For you to understand if price is going down or price is going up, all you need to do is to pay attention to the position of the moving average to the price. In this case, where the price was going down, if you pay attention, you will discover that the moving average is trading above price. This is the moving average. It is above majority of the price movement around this point here. From point A to point B, the moving average was above the price movement. All the price was below the moving average. You can see this, all of them below. The moving average was above. This tells you that this moving average at this period of time was indicating to you that the price was, this was a resistant point and the price was going down. So what is telling you is that around this point where this moving average was, this was the resistance point. This was a dynamic resistance point. Anytime price comes close to the moving average, it will go down. Comes close to it, it will go down. Even this point, it tried to go above it, it still went down. This is telling you that the moving average at this period of time was serving as a resistance point. It was indicating to you the resistance level in the price. Remember, this white thing you are seeing, if I put it like this, it is a statistic table, right? If you remember when you were doing geometric projection and all that in school, this was used as an X and Y axis. The X-axis is the price, while the Y-axis is time. So your chart, is price against time. Price against time is what your chart represents. So at every time, where is the price? So if you plot a graph, this moving average now is plotting a graph for you that around this level, from this point A to this point B, anywhere you see this blue moving average line is a resistance point, is a price point that was too expensive for people to buy, and the price was just falling. Anytime it goes close to that price, people will sell it off. Goes close to the price, people will sell it off. Though this was a resistance point. Now, in this case here, if you discover this has changed right now, because unlike the situation here where price was below the moving average, here price is above the moving average. Can you see it? Price was trading above the moving average. Apart from this one that tried to go below it, every other one was above it. This is now indicating to you the opposite of what was happening here, which means from point A to point B around this level, the price was moving up and the moving average was serving as a support level, indicating the levels of demand. So from here to here was a dynamic demand level that your moving average was indicating. Let me put this in perspective. In mathematics, in those days, what we used to do is that we will now draw a pencil. After we have marked all the X levels, we will now trace with a pencil. If you remember, you would trace it with a pencil and then you would draw what is called a curve, right? Now, the moving average here is a dynamic curve that gives you the levels of demand and the levels of supply. The moving average also can give you the level of course, when there is an equilibrium between demand and supply. It can also tell you, sorry, let me not, for some of you that didn't study economics and you didn't really like mathematics in school, let me not go too deep. What I'm just trying to say is that the moving average indicates levels of supply and levels of demand, and can give you can help you to understand where price is trading from, if price is going up and if price is going down. In this case, price is going down. How do I know? Because the moving average is above price, right? But in this case, what can you say? The price is going up. Why? Because the moving average is below price. And it's been, anytime price comes close to the moving average, to go back up. Comes close to it to go back up. Comes close to it to go back up. Why? Because this level are the very cheap level, very cheap level. So anytime price comes here, people begin feel that this is very cheap. They quickly buy, and that demand surge causes the price to go back up. It happens every time. Eventually, rather, this will still come back to the moving average and it will still push it up. Now, take note of that. What it means is that if I want to sell, number one rule for me to sell is that price is trading below the moving average. Please, you can write this down if you have pen and paper. I don't know how you're going to do it. If you have pen and paper, it's fine. If you want to, maybe, anyway, I'm recording this section, but most of the times I discover that most of us don't go back to watch this recording. So while we are doing it live, if you can write some things down, it will be great, right? So take note. If you want to sell, there are major rules that you need to look at, looking at the moving average. Number one rule is that the price is trading below the moving average. This indicates from point A to point B right now. From here, the price was trading the price was trading below the moving average, right? This tells me that the trend of the market is a downward trend. That's the first thing. This tells me that right now, around these levels, market is going down. It's not going up. No matter the number of green, if you compare the number of green candles you have with the number of red candles, the red candles outweighs the green candle around this point here. So this is a downward trend. I should not even be thinking about buying at all in my head. I shouldn't even be thinking about it, because the indicator, the moving average, has indicated to me that what I should be paying attention to is opportunities to sell, because it's a downward trend. The supply is way above the demand. Now, once I get this, the next thing I'm looking for is I am waiting for any time price goes close to the moving average. I'm not just going to sell no matter what. Look at this candle now, very big. Because it's very big, I just go ahead to sell. No. What I'm looking for, because I know that the only time the sell is very high, or the volatility of the sell is high, is when price comes close to the moving average. Whether it is touching it, whether it is trading close to it, whatever the case may be, as long as price is close to the moving average, the volatility or the probability for a sell, for price to push down beyond that point, is very high. So I am only looking for any opportunity I get where I see the moving average, where I see price going close to the moving average. Like in this case, this is the first time we got an opportunity to sell. This is the second time, this is the third time, fourth time, fifth time, sixth time. You can see all these ones, I will ignore it. Look at this one now. I will ignore this one totally. This is not, there's no opportunity to sell here. Even though this is going down, I would wait to get something like this. Look at this. This one is close to the moving average. This is even touching it. I would sell here. So those are the two major rules. So the first rule is, number one, is the price going down based on moving average position to price? Yes, I am looking for a sell opportunity. Good. Number two, is the price going back to touch the moving average, or is the price close to the moving average? If the price is close to the moving average, I don't need any other confirmation. Sometimes I just quickly go into it. My stop loss is above the moving average, take profit. I can leave it open and then close at any time price is in profit, right? That's number two. Now that's for a sell. For a buy, all I'm looking for is just the opposite of what I was looking for a sell. In the buy scenario, I need to see the moving average. Now, you also discover that the moving average during the sell scenario was actually facing down. The curve of the moving average was facing down. In the buy scenario, the curve of the moving average is facing up. Can you see this? The curve of the moving average is facing up. Now, look at this. This candlestick violated the moving average, closed above it, price came back to it, and then the upward trend started, right? And then the moving average now is below the price, unlike here where it was above, which means this is now our demand level, which is our support. This was formerly our supply level or our resistance level. This same moving average has now turned to the demand level because it has changed its position due to price movement, right? Now I'm looking for a buy opportunity, which means currently, as I'm speaking to you right now, globally, the price of the price of Euro USD is on a buy trend on the 1 hour time frame. Globally, as I'm speaking to you, based on what's happening here right now, the price of Euro USD is on a buy trend, right? Which means I should be removing anything sell from my head right now because the price is on a buy trend. Where should I now buy from? I am looking to buy at any time price comes close to the moving average. This is 0.1, this is 0.2, this is 0.3. All right. Now, there are a lot of things you can now do to really confirm this. So there's something we call entry trigger or confirmation of signal, right? Now, there are a lot of things you can do. We can put price action. If you're a price action person, you can do, for example, this is a bullish engulfing, and like that. But let me not confuse you. The easiest way I have found for people who don't really have much knowledge about all these things, and trust me, you don't need all the knowledge in the world to actually make money in trading. In my years, almost a decade of experience now, I've met a lot of people who have more knowledge than even myself, and yet they're not profitable. And the reason is very simple. One thing that you need to understand is that trading is a game of action and patience. All right, your knowledge is good. Just have the one that you can, like for example, the one I'm telling you this morning now. If you can master it, just master one, and then understand it properly, and then take action on it and understand how it works. That's all. You don't need to know all of them. Just master the one you can master and then be able to understand it properly. Once you understand it, make it your own. Modify it to become your own. That when you are woken up from sleep, you can tell somebody what is happening based on your strategy. That's all. And then you are patient enough. You don't allow greed. You enter based on risk management, because risk management is the major thing. Then you're good to go. Now, how do I confirm this? This is where we're going to be introducing stochastics. Now, before we introduce stochastics, on a normal day, based on what I've taught you so far, you're good to go. Trust me. That anytime I see this, I want to sell, and I'm selling from where price is touching the moving average, you are good to go. Anytime I see this, I want to buy, and I'm buying from where price is close to the moving average, or anytime price goes close to the moving average, based on this alone, you are good to go. But it's always good to have a second confirmation and to have a stronger entry. And this is where we're going to be introducing stochastics. Now, stochastic is an oscillator. It's an oscillator indicator that tells you, oscillator means, you know the word oscillator now, oscillator moves back and forth. So there are always two major points for oscillator indicators. MACD is an oscillator, RSI is an oscillator, stochastic is also an oscillator. Now, majorly, the oscillator indicators move between a point A to point B, which we're going to be looking at right now. So how do you put this on your chart? The same way you put the moving average. If you're using your phone, you click on F if you're on MT4, or you click on the N symbol if you're on MT5. You're going to see indicator window. If you have added the moving average, you're going to see moving average. Don't click on moving average. Just click on the plus sign for the indicator window again. It's going to take you here, and then you go to under oscillator. You pick stochastic oscillator. Now for the stochastic oscillator, just leave it at default setting. The levels are 20 and 80. These are the two levels that's going to be oscillating around. Level 20, level 80. I'm going to explain what the levels are. The color, let's leave that for now. Let's make this black. Make it a bit thick. So we have this. So now this is the level 80 and this is the level 20. What does this tell you? Now this level 20, ladies and gentlemen, is our demand level. We call it overbought region. Overbought region. What it means, oversold region. So this 20 indicates the demand. When price is too cheap, it has been oversold. Oversold means the price has been too cheap. Anytime price comes to this level, this 20 level, it's telling you that price is now within the demand level. It's telling you that price is now within the point where we should expect is price to reverse to the upside. Now, take note. Remember, this is an indicator. And I tell people all the time that indicators, sometimes price can be at this 20 for 10 years. It will not live there. It will keep indicating to you that price will soon go up, it will go up. It is just telling you that price is oversold for a long period of time. And that is why you need price action first before you need an oscillator. That's why I've taught you price action. Now we are combining it with the oscillator because this is going to help a lot. Now, the 80 period is the overbought region that signals to you that price is now too expensive and should now come down. Anytime price becomes too expensive, it should drop. Anytime price becomes too cheap, it should go up naturally. Now, a lot of times people now begin to, anytime price comes to 20, they will now buy. Price go to 80, they will sell. And then it will work for some time. And then one day, because of lack of risk management, it will blow their account. Now, the reason why your account is being blown by this is not because this is not working. It's because, number one, you are relying on it as a holy grail rather than a tool. And number two, you are not using proper risk management. Now, what we're going to be doing this morning is we're going to be combining this moving average movement and stochastics, and we're going to be using stochastic as the confirmation of this. So this is our major strategy, why this is a confirmation to enter. This is the major one. This is a confirmation to enter. How does it work? First of all, don't even look at stochastics. First of all, look at what you have here. So in this case, I wanted to sell, right? Let's go back here. I wanted to sell in this case, and I'm looking for any time price goes close to the moving average, then I will sell from the moving average, right? Good. Let me use this. So now, anytime price goes to the moving average and I'm looking for a sell, I should at the same time be looking for where stochastics also is close to the 80. If I can see that stochastics, both stochastics and the price is close to 80, while the price is also close to the moving average, this gives me a double confirmation for a sell. That's what it means. So, for example, look at this one here. We see price very close to the moving average period around this point after this major pullback. And we can see that stochastics was also close to the 80 period, 80 level, right? This is a confirmation. This is a double confirmation for a sell. So stochastic has just confirmed this sell to me. Remember, I told you that even without stochastic, this strategy is good to go. But confirming it helps you to filter out a lot of, gives you a double confirmation, and then it filters out a lot of noise and helps you to really understand what you're doing, right? So now, based on this now, I can now confidently take my sell, and then of course, my stop loss will still be above the moving average, and my take profits can now base on stochastics. My take profits can now base on stochastics going back to 20. So anytime stochastics goes back to 20, I can jump out of that trade in profit, or if I don't understand how to use demand and supply or support and resistance for my take profit on the chart, I can use stochastics to come out of that trade anytime price goes back to 20, because I believe that from there again, price should push up. And you can see what happened here, right? When price came here, I should have gone out because this was 20, and then from here, price pushed up. Look at this one again. Look at this one here. Stochastics was very close to 20, very close to 80, and then we also saw this movement around this point here. This would have also been a very, very good trade for a sell, right? And you can see what price did next. And of course, same thing happened here again. Okay, so until when price actually broke this. Now, for a buy, all you are looking for is that, of course, just the opposite. Anytime you want to buy, and then of course you are first of all confirmed that the moving the price is close to the moving average, trading close to the moving average to the downside. You also want to confirm that this stochastic as well is close to the 20 level, which is the demand level. All right, and that gives you a confirmation for your buy. Let's quickly go to the 15 minutes time frame to see more opportunities around this level so that you can see what I'm talking about clearly. So for example, look at this on the 15 minutes. Look at this as well on the 15 minutes. Look at this on the 15 minutes. Can you see this? So on the 15 minutes, you're going to get more opportunities because, of course, it gives you more. It's able to expand the candlesticks and zoom in a more in a very good way, unlike the 1 hour. All right. So you can see this as well, the same thing here, the same thing here. You can see the same thing here. For the buy, let's quickly look at the buy opportunities that we had when price was actually coming down. So on the 15 minutes, look at this. I saw this candlestick movement around this point. Look at what stochastic was telling me. Can you see this? See the same thing here happening. Look at what stochastic was telling me. Look at this one. This is what stochastic was telling me. And if you check it, all of them are good to go. Now, of course, this is not 100%. There's no 100% in trading. Let me just quickly mention that. Look at this. Look at this. But 60 to 70% or 75% of the time, you're going to be getting this correctly. With a very good stop loss levels, you should be good to go, and you should be able to actually take advantage of this market based on your levels. So let's say you take 10 trades, and out of those 10 trades, you're able to win 6 to 7. The remaining 4 or 3, you're able to get out of the trade with minimal loss using your stop loss. You're good to go. The problem I have is a lot of people don't know how to use stop loss, or don't like to use stop loss because they don't want to. I keep saying it. If you're a beginner listening to me, the absence of stop loss on your chart does not mean stop loss is not there. Stop loss is there. It's just that your entire capital now is stop loss. What it means is that anytime your capital is exhausted, the trade will still stop in a loss. But this time, it will not be called we will not say you have lost a trade. We will say you have lost an account. So which one is better? To lose a trade than to lose an account? All right. So stop loss is very, very important, because a lot of times when people eventually, lose money in this business, is because of lack of proper risk management. So this actually is a very good thing that you want to try out. Very powerful strategy. I've been trying it out for some time now, and it's been very good. The risk to reward, like I told you, is between 60 to 70%, sometimes 75% of the time, weekly. I'm giving you weekly trading now. So if in a week I take 10 trades, 60 to 75% of the time my trade would hit take profits, and then of course 40 to 30% of the time I'm going to have a stop loss hit, which is normal due to market reversal. We're in a very volatile period right now with everything happening, which is okay, right? I know we have questions. I'm coming. Let me just quickly talk about gold. Okay, just hold on. Let me quickly talk about gold. There's somebody saying the risk to reward is very low. No, it's not. 60 to 75% is very high actually for any strategy you're using. Any strategy that gives you 60 to 75% risk to reward ratio is quite high. It's quite high. You want to pay attention to that strategy, because even the banks don't have that high, don't have that much. Trust me. Okay. So what you just want to do is combine it with proper risk management, and you're good to go. So let's try the same thing on gold and see what we have. So we have our moving average. Remember, the period is 21, shift is 0, exponential close. Anyway, I'm going to drop this on the YouTube page, and you can also get it from your account manager. The oscillator, we have the stochastics. The stochastic, like I said, is just default setting, 2080 default setting. Don't touch anything, just default setting. So it should be 2080 for default setting. Moving to the 15 minutes time frame on gold. So right now, this was an upward trend on gold right here. We can see the moving average trading below price. And at this time, I'm looking for any time the moving average comes close, price comes close to the moving average for a buy opportunity. This is a buy opportunity, another buy opportunity, another buy opportunity. So I'm going to give you an instance where this doesn't work, right? So let's assume that I want to take a trade from here on gold, from this point to this point, right? So hold on, look at this. Now, at this first level, where price came to the moving average level, and moving average was a little bit above below price, this was a good trade around this point here. This was a good trade. I can see this very, very good trade. This was also a bullish engulfing pattern at the end of the day. This one did not really give me an indication. It was not really too close. So maybe I would ignore this particular trade because it was not really too close to the 20 period. So let's assume we ignore this. Okay. So we took this one. Look at this one. We took this one. So we took this trade. So in the case where we took this trade, let's assume that you took this trade. You've taken this trade, this one has given you profit, or maybe you are still in this trade, whatever the case may be, or you're out of this trade already. And then this is the next trade, because this one did not really, there was no confirmation from the stochastic, because this was not close to the 20, right? So this was the next time you took the trade. This was the next trade you took, right? And you can see what happened here. Price went up a little bit, but did not get to, it didn't really go far before price broke the moving average to the downside. Now, in the case where I took this trade, my stop loss for this trade would have been around here. So I took the trade here, right? My stop loss would have been around here. Let's say I put my stop loss here for that trade. In this case here, after taking that trade, my stop loss would have been around here. So this stop loss was not hit. So this stop loss was not hit. Price went into profit. This was my stop loss when I took this one. Price went a little bit into profit. Let's say I didn't close because I was expecting price to push more. And price eventually, closed below and then started going down. This would have taken me out. I lose so much. Maybe probably I'm losing $10 to $15 on this trade. This particular candle, if I held this trade to take profit to when price eventually moved from here back to the upside, I would have taken this whole thing. This is nothing less with the 0.01 trade. Let's calculate it. This from, let's assume I entered from here. This to this point is around $30 in profit. That is if I leave here. If I leave here, this is $46 in profit. Now, let's look at this one. I took this trade here and price eventually took me out here. This is $9 in a loss. So compare it. $30 or $46, and I'm losing $9 at the end of the day. You can see why I said it's a very good risk to reward. All right. And this is just today. This is today. This is today, happening today. This is very recent. This happened this morning. Okay, so this is a strategy you want to try out, and of course it's a very, very good strategy as well. The major rule is that you treat it as a tool and you are very aware of what price is doing based on the trend, and then you are taking the trend. All right, same thing here. You can see this market now based on this moving average. This is not a buy or a sell. This is a consolidation happening on the 15 minutes time frame. Why? Because the moving average is not below price and it's not above price. It's just in between the price. Anytime you see the moving average trading like this in between, this is a consolidation. This means for now, stay out. Just hold on. Wait. Wait until it is now clear that when you look at it like this, you don't need to begin to ask yourself, is it going up? Is it going down? You can see it clearly that it is going down or it is going up. That is when price is trending. But when you're asking yourself, does this mean it's going up? Does this mean it's going down? Just know that it's not doing any of them. It's just consolidating. That's why you're confused. But when price is trending, you will not be confused at all. Are you confused with this one? This is clear. It's going up. Is this one confusing? No. Is this one confusing? So the reason why this one is confusing is because, as you can see, there is no curve like this one that is curving up, curving down. This is just going straight. The moving average is going straight because the candlesticks or the price does not have any direction. So this is a consolidation. For now, you stay out. So this is just basically how this candlestick, this particular thing works. Do you have any question before I want us to take some trades, some maybe 2 or 3 orders, and then we'll call it a day. Do you have any question? Yes, this is recorded, and you can have the recording after the class. Okay, you can delete one. So I'm having this from Madam Evelyn. You can delete the 50 period, okay? You can delete it. You can delete the 50 period from your charts. It's very easy to delete. It's very easy to delete. You can add it, you can delete it at any time. Do we have any question? If you don't have any question, do you understand the strategy? Does it make sense? If there are no questions, does this strategy make sense? Will you be trying it out this week or today, Seth? You can use it on any instruments. Any instrument from Euro USD to any instrument you want to trade it on is good to go. Good to go. Okay. All right. So the recorded version will be available probably an hour after we call it a day, and you can get it through your account managers or on our socials. Okay. Now, the major thing I want us to really talk about right now, as we begin to conclude, is I want us to look at some trades based on what I'm seeing on the charts, and I want us to be able to take some trades at that level there. So the first one we're going to be looking at. Madam Evelyn, I didn't get your question. Please ask the question again. I didn't get your question. So guys, let's quickly take some trades based on what I'm seeing on the chart, maybe 1 or 2, so at least we can actually have So this has look at this. This is a very good example of a buy trend. Look at this. So if you put your stochastics on this one now, if you put the stochastics on this for us to confirm, you can see this is on the 15 minutes time frame, right? Remember, I want to buy from here. Based on stochastics, is this a confirmation? Please answer me on the chart. Give me a feedback on the chart. Based on stochastics, these two, this place here and this place here, is it good to go? Even this one, the three of them, 1, 2, 3, are they good to go based on stochastic confirmation? And what should I do? What would I have done there? Is it a buy or a sell based on stochastic confirmation? Please drop it on the chat for me very quickly. Let me know if we understand the strategy. Okay, I have feedback from D. Thank you so much, D. I have feedback from evangelists. Mr. Joshua Etusi, I see you. Thank you so much for your feedback. Jay, I see you. Thank you so much for your feedback. Yeah, we are all correct. We are all correct. So you can see it's quite simple. Mr. Williams, I see you. Very good confirmation. I agree with you, Mr. Williams. You can see very simple, straightforward. Just use on the 15 minutes time frame. This is on GBP USD anyway. The major thing is that the trend is clear. You can see it clearly. And price is trading around those zones. And then you can just confirm it with your stochastics. You're good to go. Remember, this is not 100%. So even though you're doing this, you have to still do your risk management, put in your stop loss. But what I'm saying is that out of 10 times you use this thing, 6 to 7 times you always end in profits. And then, of course, the remaining ones, you can use your stop loss to minimize the loss. And then at the end of the day, your P&L, your profit minus your loss, will still be in positive. That's the major thing. At the end of the day, no trader in this world, no matter the strategy they're using, that doesn't have any loss. Nobody, even the big banks. But at the end of the day, it's all about P&L. At the end of the day, are you in profits or not? All right. So that's just it. Okay. I can't. The market has moved ahead here, so I can't really see any entry for us. Let's go to another instrument. I'm looking for an instrument where we can take an entry. Let's look at USDJPY. Okay, this is looking good. USDJPY is looking good. USDJPY is looking good. So let's see if we can take an entry. Now, this is not based on the strategy. I'm just trying to give us an entry based on the fact that, at least so that we can have some trades today. So on the 4 hours, price is still looking very bearish on USDJPY. And I think price is going to be breaking this point very soon. On the 1 hour time frame, this is also looking very bearish. So we're going to be going for a sell stop order on USDJPY. We're going to be having a sell stop order on USDJPY. Please hold on. I'm just trying to get the levels that I want us to go for. So let me look at it. Okay, this is good. So USDJPY, okay. USDJPY, let's quickly take our trade. And then we're going to look at, somebody said I should look at US 100, no problem. So sell stop on USDJPY, entry, our entry for the sell stop is at 159.083. The TP for that is going to be at 158.966. The SL for that, sorry, the SL for that is going to be at 159.176. Okay. So let's look at US 100. We are online. We are on EBC Nigeria everywhere. Everywhere we are on we are EBC Nigeria. Just look for EBC Nigeria everywhere, from Telegram to YouTube to Instagram to Facebook. We're not on Twitter. That's the only place we are not on right now. But Telegram, YouTube, Facebook, Instagram, EBC Nigeria everywhere. All right. So let's look at US 100. Somebody asking me to look at that. US 100 is DAX. Sorry, is what's it called again? NAX USD. Mr. D, the trade has been dropped though. Please check. The trade has been dropped. This is looking very good for a buy based on what I'm just seeing now. So US 100 has been going up on the 1 hour time frame. Can we confirm this for an entry, guys? Let's practicalize let's see if this can give us an entry. Let's practicalize it. Let's see. Let's see. Oh, fantastic. This is so sweet. Ladies and gentlemen, buy US 100 right now. I'm going to give you your stop loss right now as well. This is so sweet. This is what we're talking about. This is what we're talking about. Very sweet. This is all we've been talking about since morning. So our take profit is going to be here. Our stop loss is going to be here. So this is this up to 1:1? I think so. So US 100 on the 1 hour time frame, this confirmation is looking good. Price already at the 20th stochastics. You can see this is as an upward trend. Moving average is also very good. So of course our stop loss is here. Please buy at this next candle now. Enter now. Enter now. Stop loss. Let me give you the stop loss for US 100. So US 100 buy our SL for that trade. Excuse me. Our SL for that trade is at 27219.2. TP is at 27411.1. I've dropped it. Who gave me this US 100? Let me go and check. I think is Mr. Chris. Mr. Chris, God bless you. Thank you so much. I think I've been looking for how to practicalize what we've been talking about so far. So this is a very good practical way of looking at it. All right. So this clearly goes in line with everything we've been talking about since morning. And you can see it clearly that this price is about to push up, right? And the confirmation is also good. And of course, this is going to be breaking that take profit point. So you can break even when price gets there. Or you can leave when price gets to this 80 level. So this is very good. Thank you so much, Mr. Chris, for that. Okay, guys, so we've actually spent a lot of time. I believe today we've really learned a lot. This is 1 hour past the time already. I want to say a very big thank you to everyone who have participated. If you enjoyed this class, please drop your comment, drop your emoji, and make sure that you are actually at least giving me a feedback on what you've learned so far. I want to say a very big shout out to Mr. Day. I see you. I see Mr. Ruby Emmanuel Ogbaji. I see Mr. Ayetoye. Ayantoye, rather. I see Billionaire in the Making once more. Evangelist Celestine. Mr. Chris, I see you. D. Mr. Emmanuel Lazy, thank you so much. Mr. Joshua Etsusi, I see you. Madam Evelyn, I see you. Mr. Francis, I see you. Thank you so much. Jay, I see you. Mr. John Aderomo, I see you. Mr. Gilbert, I see you. Obin, I see you. Madam Ajoke, I see you. Madam Mr. Rex, I also see you. Solomon, I see you. Sulaiman MT, I see you. Mr. Williams, I see you. Zelmi, I see you. So, guys, if you enjoyed this class, please drop a comment for me, drop an emoji for me. It really encourages me and helps me to understand that you guys are giving me good feedbacks. I'm going to be seeing us on Wednesday, where we're going to be looking at our normal life analysis market. Don't forget the demo competition starts on the 11th of May, and you can ask your account manager to let you know how to participate in this competition. I'm going to be seeing us on Wednesday. Let's have a fantastic and a wonderful trading day ahead. God bless you all.